The season of corporate reports for the second quarter is in the full swing. The first report set the stage for a rally of the benchmark stock indexes. And today, investors will get to know no less important reports, so they are ready for active trading. Apart from corporations, investors also responded to inflation data and the data on the US construction sector. Tuesday was another lucky day for the US stock market. The major stock indexes extended their gains and climbed higher than a 15-month high. The Dow Jones jumped by 366 points or 1.06%. The index rallied for a 7 sessions straight and the longest winning streak since March 2021 and closed at the highest level since April 2022. The Nasdaq added 0.76%. The S&P 500 closed 0.71% up at 4,554 points. The major stock indexes traded in the green in the New York pre-market. The S&P 500 is expected to trade in the intraday corridor between 4,510 and 4,600 points. The stock indexes gained ground on Tuesday amid solid corporate reports of top US banks. As a result, the Dow Jones had the longest winning streak for more than 2 years. Morgan Stanley shares jumped by 6.45%, the biggest one-day percentage gain since November 2020. The banking giant beat market expectations as a growth in its asset management business offset lower trading revenues. Shares of Bank of America added 4.42% after its earnings surpassed expectations, earning more on customer loan repayments. The S&P 500 banking index rose by 1.9%, its highest level since the banking crisis in March. The regional banking index surged by 4.10%. In addition, statistics released earlier Tuesday showed that retail sales rose less than expected in June due to lower building materials and service station revenues. Although consumers increased or maintained their spending levels across product groups. Complementing the macroeconomic picture, US factory production unexpectedly fell during the months, but recovered in the second quarter thanks to the acceleration in car production. Apart from banks, the indexes were also supported by the technology sector, thanks to a significant increase in the Microsoft shares. Windows Maker added 3.98% to close at a record $359.49 after announcing that the company would charge extra for access to new AI features in its Office software. On Wednesday, futures for the US stock indexes maintained a major momentum in anticipation of fresh quarterly results. Tesla shares edged up by 0.5% in the pre-market, trading ahead of the publication of quarterly results. A strategy to increase sales by lowering prices likely provided the strongest revenue growth in 5 quarters, while margins fell to a 3-year low between April and June, analysts predict. The results of Netflix and IBM are also on the radar of investors later today. Microsoft shares grew by another 0.3% the next day after the Windows Maker hit an all-time high. As for the economic calendar, the latest construction data reflected persistent pressure on the sector due to the Fed's key rate hike. According to preliminary data, building permits in the United States declined by 3.7% in June to 1.44 million from a year ago, below the 7-month high at 1.496 million in May. The region missed the consensus of 1.49 million. The number of single-family homes under construction, which account for the Bulk of a housing construction fell by 7% last month to a seasonally adjusted 935,000 units, and the release of the data had a little effect on the movement of the indexes, which are now focused on the corporate results. On the back of the corporate gains, Credit Suisse raised its year-end target for the benchmark S&P 500 to 4,700 from 4,050 points, citing fading recession risk and stronger big tech earnings guidance. In the currency market, the US dollar index regained its footing in the midday and settled above 100 points. Having added 0.2%, the index is trading at 101.18 at the time of recording this video. The instrument is likely to trade in the intraday corridor between 99.80 and 101.30. The greenback found support today from cooling inflation expectations in Europe and the UK. The red-hot CPIs revealed easing inflationary pressure that could assure central banks to revise the agenda for further rate hikes. Headline inflation in the UK slipped to 7.9% in June on year, much lower than the expected 8.2%. In response, the pound sterling lost 0.9% against the US dollar because the market no longer expects the Bank of England to raise interest rates to 6% from the current level of 5%. Eurozone inflation data for June confirmed that the annual rate had fallen to 5.5% on a monthly basis. Inflation was 5.5%, an uptick higher than the forecast of 5.4%. ECB Governing Council member Klaas Knut suggested on Tuesday that the rate hike after next week's meeting is by no means certain. Against this background, the euro lost 0.18% against the dollar, and the decline in inflation expectations in the UK and Europe helped the dollar win back some of its losses and strengthen above 100 points. Following Canada's inflation data, the Canadian dollar depends on the oil prices. The USD CAD is trading mixed today. At the time of recording this video, it was trading at 1.3165 within the intraday corridor between 1.3140 and 1.3210. Canada's annual inflation rate fell more than expected to 27 months low, over 2.8% in June, due to lower energy prices, data showed on Tuesday. At the same time, food and housing prices continued to rise despite 10 interest rate hikes. Canadian Finance Minister Chrystia Freeland called the inflation report a significant moment and said that inflation in Canada is lower than in any other G7 country. As a result, markets cut bets on a rate hike at the next Bank of Canada meeting in December to a 20% chance from a 25% before the release of the data. At the same time, the decrease in the hawkish expectations of a further monetary tightening by the Bank of Canada was offset by the growth in oil prices, thanks to a promise of China to intensify economic growth. Brent crude futures rose by 0.9% to $80.41 a barrel, while WTI crude futures grew by 0.6% to $76.22. The crypto market is trading with a cautious optimism. Almost all tokens are trading within ranges. Bitcoin dipped below 30,000. It climbed by 0.4% to trade at 29,900 at the moment of recording this video. Popular altcoins are trading higher, except Binance. Ethereum, Solana, Ripple, Cardano, and Litecoin added from 0.5 to 4%. Today, the cryptocurrency market may receive a fresh impetus after the opening bell, as the future of digital assets will be discussed by lawmakers, which may shed light on the prospects for regulation. In the meantime, a number of policymakers have expressed support for the cryptocurrency market. Congressman Richie Torres criticized Gary Gensler, the chairman of the Securities and Exchange Commission, for what he sees as an unreasonable crackdown on cryptocurrencies, and said that the Commission has no legal authority to regulate digital assets. Tom Emmer of the House of Representatives joined others in calling Ripple's victory a momentous event and suggesting that it has enshrined in the law. As for the intraday outlook for Bitcoin, it actually remains within a wide range of $29,600 to $30,400. If the asset does not receive momentum, it could trade sideways between the levels of $29,800 to $30,100. Going beyond these borders will lead to a retest of $29,600 and $30,400 and the wider levels of $29,000 and $31,000 later on. And that's all for today. We keep monitoring the financial market situation. Subscribe to our channel and see you online tomorrow.